Wow, ladies and gentlemen, we have some major developments that our markets are probably not going to like. And let me just acknowledge the elephant in the room because I think you guys are already going to know what I'm going to say. Biden has stepped out of the presidential race. Now, I know a lot of you guys are going to say, well, doesn't this raise Trump's odds of winning? And that's good for equities because that means lower corporate taxes and higher earnings and maybe a better economy. With, I should also mention, more rate cuts from the Fed, which would presumably happen. And the short answer is no. It actually lowers Trump's odds of winning, which could be negative for markets. Now, the biggest negative of all is really not a negative at all. It's the uncertainty that this will create for who could be in the White House next year. Because now that Biden has stepped down, there's to some degree going to be a power struggle in the Democratic Party. And we just don't know who's going to be the ultimate candidate on the ballot this November. And for any of you guys that have been a viewer of this channel for more than 2 hours, you understand I have made this very, very clear. The markets can handle bad news exceptionally well. Like the markets almost don't care about bad news. Bad news just comes and it goes and blah, blah, blah. As someone pointed out recently in the comment section, the markets have a memory of a mosquito when it comes to bad news. But it's uncertainty that the markets cannot handle. We just don't know how to process that. We don't know how to forecast for that. And that's what tends to lead markets to some pretty extreme downsides. Now, I'm sure you guys already know some people's opinions about this, including someone like me, Kevin, that I'm sure a lot of you guys also watch, I'm going to assume. He thinks there could be 15% downside from here in the NASDAQ, in the triple Q ETF, just solely based on this alone. Now, we do have earnings, we have economic data coming out, and now you add this political uncertainty on top of it, and you have a correction recipe. Now, I want to start off this video with what Gary Black just said about this whole situation. Gary Black shares this X post from Mario Nafal. He says, polls show Kamala versus Trump race is too close to call. A CNN poll of polls average shows a tight race between Kamala and Trump for the 2024 presidential election, with Trump at 48% and Kamala at 47%. The poll of polls includes the latest nonpartisan national surveys from CBS News, YouGov, NBC News, Fox News, NPR, PBS News, Marius College, ABC News, Washington Post, Ipsos, and CNN. Arguably, a lot of those news sites do lean more to the left. And let's be honest, I think most of America wants Kamala Harris in office less than they wanted Biden. So in the grand scope of things, once these polls really start to kind of reflect accurate information, you're going to still see a Trump lead that is pretty massive. Which again, leave the politics out of this. All you really need to know is Trump, positive for markets. Everyone else, negative for markets. From the market's pricing in perspective. Because again, a Trump presidency means lower corporate taxes, which mean higher corporate profitability, which means more rate cuts from the Fed in 2025. And thus, more rate cuts from the Fed means lower odds of a deep recession. You could also perhaps say that maybe a conservative presidency would have less debt issuance, and that would be very positive for 10-year treasury yields. It could actually bring them down quite a bit. Because a lot of people think the Fed funds rate dictates 10-year treasury yields. It really doesn't as much as you think. 10-year treasury yields, for an example, what you go and get a auto loan for is, well, they look at the 10-year treasury and they add a percent or two on top of that. For mortgages, it's like 3%. So that's why you're getting 7% mortgages right now, part because 10-year treasury yields are 4.22%. Now, it has to do with supply and demand. The government's spending money like crazy, so they're flooding the markets with supply. The actual yield or amount you make on a bond is fixed. the price varies. So just like a stock, if you flood that stock with selling pressure, you're going to get the price that falls on that stock. And if it's a dividend stock and that price falls, the yield goes up. So that's another reason, again, long story short, from a market's perspective, a conservative presidency would probably be good for at least bringing down 10-year treasury yields a little bit more than what you otherwise would see. Gary Black says 2 items I find intriguing. Biden didn't endorse Kamala in his original statement withdrawing from the race. Number 2, Barack Obama didn't endorse Kamala at all. There's been no endorsement. He goes on to say that Michelle Obama is now listed as second choice by odds makers after Kamala to be the Democratic nominee, ahead of Whitmer, Newsom, and Clinton. Michelle is the only Dem who beats Trump in a head-to-head race. Michelle has expressed zero interest in being president, but watch for the Obamas to make a move as we get closer to the Democratic convention in Chicago, Michelle's hometown. I mean, wow, all of this is just crazy. And every day we're going to get more developments. But now I want to speak about this from a market perspective. And we've already been kind of talking about this, but specifically what's coming next for markets, because let's be honest, you haven't seen nothing yet. And apparently Kamala Harris sees a surge in big money support after Biden drops out. The progressive donation platform Act Blue said it raised $46.7 million after Biden endorsed Harris. So from market betting odds perspective and polls, I think it's a little too soon to tell what the actual, polls are going to show between a potential Trump and Kamala presidential election process. But it will lower Trump's odds of having a landslide victory, which have very negative impacts on our markets. Because in recent days and weeks, really since the debate, no wonder stocks have done so well. We're pricing in more cuts. We're pricing in maybe a less fiscally irresponsible federal government. And we're pricing in lower odds of a recession. What's there not to like? So if Trump's odds do start to fall, that's going to be negative for markets, but you can really just boil this down to uncertainty. Ask yourself this: is there more or less uncertainty? Well, there's clearly more uncertainty. And with policies that are so impactful, such as corporate tax rates that affect corporate profitability, this uncertainty is not a little problem. It's a big problem. It is the whole deal in 2025. There's also calls for Biden to step down as president, which I think is highly unlikely, but that would really cause a lot more uncertainty. Now, I also want you guys to remember, it's not just this election that we're dealing with, this uncertainty around that. It's also the economic data. Number one most important thing for our markets is the economy, and it always will be. How strong is the economy? Is the economy weakening? Are we heading into a recession? These are questions that never go away, that are asked, between cycle after cycle. And recently we've seen the economy start to tilt downwards, or it just doesn't look great. And if we continue to see that, that's going to add even more pressure on markets that already have a lot of other pressures going on. You could also make an argument that the 40% weighting in the S&P, your Super 6 or your Mag 7, that is Nvidia, Google, Amazon, Apple, Microsoft, Tesla, these big companies, they are kind of priced for perfection. Now, not nearly as much Tesla, right? I think Tesla can still have a lot of upside here. It's still 40% or so off of all-time highs, 35% or so, 40, around there. You're not priced for perfection with Tesla, but the rest of the markets are kind of priced for perfection. And between the earnings that we're going to get this week, between the election uncertainty, between the economic data that we're going to get, consumer spending, PCE, all kinds of different surveys, the ISM data comes out this week, I see a much stronger case for downside this week than upside. And I do think this really raises the odds of us retesting this 200-day moving average. If individuals like me, Kevin, are correct, and let's assume the S&P does about 15% downside, that would put a potential large correction down to about 480 on the SPY, which would put you back to roughly where you were around January of this year, almost February of this year. So really, that's not too far-fetched. And I still think there is quite a bit of room that we could fall, even if things go over relatively smoothly with this whole political uncertainty. Now, I still think a better base case assumption is a retest of this 100-day moving average around 525. But after this news today, there's a greater chance that you're going to see a more significant correction. I mean, just think about it like this. During election years, normally we get a 13% correction, let alone when the current president of the White House is stepping out of the race for we really don't know why. That's a big shift from what we heard even a week ago, where he would not step down unless Almighty God came down and told him. Does he have a health condition? Is someone else going to step up before the election? Like, I mean, there's clearly more uncertainty now than there was before. Again, long story short, odds are now greater that you see a larger correction here. And I think Tesla could also be a little bit more in the crossfires there, because Trump would be, positive for Tesla stock investors ultimately. But, this is going to lower the odds of a Trump landslide victory, which I could only imagine would be negative to some degree for Tesla. And if Tesla stock does fall in any kind of meaningful way, well, I will be there to buy the dip. Let me know what you think about this information down below in the comment section. This is kind of my initial thoughts on this. We'll have to see how markets trade come tomorrow. Futures are pretty much unchanged. Not a whole lot going on there, but I think 10-year treasury yields are going to react quite a bit. The dollar as well as oil can be impactful to our markets. And let's be honest, it's Sunday. A lot of Wall Street is not working. They're not putting out fresh new notes on this information. And that's what a lot of algorithms trade off of as well. So I don't think we know anything yet. And I think if we were to draw any conclusions, this is probably not good for markets. Really, no matter what happens tomorrow, if we're green, if we're red, I think it's a safe assumption to say, yeah, this is probably not good. So let me know what you think about this information down below in the comments section. Not from a political standpoint, please, from a markets perspective, because hopefully that's what you got out of this. I don't care who you vote for. You don't care who I vote for. That doesn't matter. From a markets perspective, this is very impactful. Nonetheless, ladies and gentlemen, if you guys want to come trade with us live in real time and come win with us, check out that link down below in the description of this video. There's going to be a lot of trading this week as you are starting to finally get into a new round of earnings. Link down below in the description of this video for that. You guys have a fantastic rest of your day and night. I will see you in the next one.